Good day, ladies and gentlemen, and welcome to our webinar on the basics of fundamental analysis, meaning understanding economic events and their effects on the marketplace. Now, the first question is, what is fundamental analysis? Now, fundamental analysis studies the core underlying elements that influence the economy of a particular entity, like a stock or a currency, and it attempts to predict price action and trends by analyzing economic indicators. Now, I will separate this because stocks, shares, companies are like countries, and they have their own set of economic data. We call these earnings reports and press releases, sales reports. And then we have, of course, all the other economic data, which is released by countries or based on statistics from a country. Now, these also affect the stocks and shares in the stock market indices, but the underlying effect affects primarily commodities, currencies, futures. So reports can go from anywhere from a crop report to a jobs report, but at the same time, we can have an overall event like we have right now with the coronavirus, which is affecting both the value of stocks, the indices, the value of currency, as well as the value of commodities and futures. But a Google earning report that showed that Google has earned an extra $1 billion or signed up an extra 100 million subscribers won't really have an effect on the currency market or the stock or on the commodities market or the cryptocurrency market, but it will have an effect on the value of Google stock. So they all fall under the area of fundamental analysis. So fundamental analysis can be explained as a method of estimating a security which involves attempting to evaluate its basic value by assessing allied financial, economic, and other quantitative and qualitative factors. That was a mouthful, wasn't it? Fundamental analysis aims at studying everything which affects the value of a security, including macroeconomic events, such as the overall economy or industry conditions, and company-specific factors, including financial condition and management. Now, you have to remember, in the stock market, every time somebody buys, somebody else sells. In the futures market, again, now nobody's taking delivery in the futures market, but for every buyer, there's a seller. Most of the time in the commodities market. Not so much in the CFD industry and not so much in the Forex industry. But this analysis method is taken as the opposite of technical analysis. Now, as explained by Investopedia, fundamental analysis aims at using real data to evaluate the value of security. And even though most analysts use fundamental analysis to evaluate stocks, this technique can be used for almost any type of security. So the main goal of carrying out fundamental analysis is to generate a value that an investor can weigh against the current price of a security, with the goal of outlining the type of position to take with that security. In the terms of stocks, fundamental analysis emphasizes on the financial statements of a company being assessed. Now, different types of fundamental analysis or fundamental events or economic events have different effects on the market. Most of us are short-term traders. So even though a solid earnings report or a good jobs data report may not have a general effect in the Forex market or affect the value of gold, or a solid earnings report may not affect the value of the shares in the short term. It might help us know that Google shares will steadily go up over the next year, because if the earnings report came out and hit all the bells and whistles, everything that was projected, there should be no market movement, so to speak, or no market rally, because it's already factored into the markets. A good jobs report that comes out, where we expected, will help show the U.S. economy is in better shape, but it won't necessarily affect the S&P or the Dow. It most likely will not affect gold or the dollar index in a short term, but it might tell us that the dollar will steadily go up because the economy is chugging along nicely. So we have to take these into account in the type of trading we're going to do. Now, in CFD and Forex market, we also get what we call knee-jerk reactions, which are market reactions to the data as it's released, which slowly dissipates out of the market. Now, fundamental analysis can be illustrated as an example we're going to show shortly. So let's assume that an investor can execute fundamental analysis on the value of a bond by looking at economic factors, including interest rates, the overall state of the economy, as well as information about the bond issuer, like the changes in credit ratings. For evaluating stocks, this method involves the use of revenues, future growth, earnings, return on equity, profit margins, and other data for determining the underlying value and the possibility of future growth. So let's separate the markets. So first is the stock market. And you have to understand how all of these play together and what the market, not what a trader's looking for, what the overall market is focusing on. To give you an example, a few earnings seasons, quarters ago, Walmart earnings came out. Now, they met expectations to a degree, except their same-store sales were a little bit off, and their profit was a little bit down. So what we should have seen was probably an easing back in the price of Walmart shares. But buried in his earnings report was online sales, which were doing much better than expected. Since the market focus over the last few years has been shifted from brick and mortar stores to online stores, and Walmart was taking a bigger market share in online stores, even though they were losing footfalls in their stores and their sales were slightly off in the stores and their expenses of operating the stores was higher. The market took this as a very good sign, and you saw Walmart shares rally. They actually went up almost, they didn't go up instantaneously because you didn't have a knee-jerk reaction, but they went up later in that day. So you need to understand what you're looking at. So fundamental analysis is a stock valuation method that uses financial and economic analysis to predict the movement of stock prices. Predicting future price movement, determining fair value, management evaluation. Every time you hear that somebody leaves the board of directors or a CEO changes or a CEO announces his retirement, it doesn't have to be a scandal. It doesn't have to be anything horrible. But new leadership in a company might show a shift in overall things. It can be viewed as positive. It can be viewed as negative. It can be viewed as just market uncertainty. Like when, I think his name was Jack Walsh, announced his retirement from General Electric. And he had led General Electric for like 20 or 30 years. I don't know what the actual year did. But he was General Electric. Okay. Now, he had formed this company into his own vision. And everybody knew what to expect and how things were operating, what his plans were. And when he announced his retirement and they were bringing somebody in new, especially when they were starting a search for somebody new, markets or investors, especially guys buying big bulks of GE, were a little uncertain because they didn't know who the new guy was going to be in. Was he going to shift more on dividends or retaining earnings and using them to invest in the, for capital expenditures? For instance, I held a lot of GE shares in my retirement fund because I wanted the dividend. Okay, this is all that I wanted. I wasn't concerned with the share price as much as I was the annual dividend. Well, a new CEO or new president of the board could change. That doesn't mean it's good or bad. It's just not right for my goals. So this is important. We also want to analyze company financial strength and determine if the company's ability to beat its competitors. Look what's happened over the years with J.C. Penney, Sears, um, Target and Walmart are doing pretty well, but J.C. Penney and Sears, who dominated the markets, lost the ability to beat their competitors. One day they were finally just gone. So the goal of fundamental analysis is to make financial forecasts, and the fundamental analysis is done on the historical and present data. So let's discuss some highly important objectives of fundamental analysis. It is done to calculate credit risks. It also makes internal business decisions. It also uses to make projections on the business performance. Fundamental analysis is used to conduct a company stock valuation and predict price evaluation. One of the primary assumptions of fundamental analysis is that the price of the stock market does not reflect a stock's real value. Okay. Now, how do we determine if the stock's real value and what it is actually worth are higher or lower, lower or higher? So it's important to understand. So the concept of intrinsic value takes place in fundamental analysis. It's important to address the subject of intrinsic value in the long run. The stock market will reflect the fundamentals. There is no point in buying a stock based on intrinsic value if the price never reflected that value. Nobody knows how long the long run really is. An investor can estimate the intrinsic value of a firm from where they can buy at a discount. Basic things is that you don't know whether your estimate of the intrinsic value is correct, or even you don't know how long it will take for the intrinsic value to be reflected in the marketplace. So what do we have that we can base our earnings, our analysis? One thing is earnings. Although earnings are important, they can't really tell you anything by themselves. They don't identify how the market values the stock on their own. You also need some fundamental analysis tools to begin building a picture of how stock is valued. These ratios aren't difficult to calculate, and in fact, you can find most of them already completed for you on sites like CNN Money or MSN's Money Central. If you want to weigh it in yourself, keep in mind that some of the most popular tools for fundamental analysis focus on earnings, growth, value in the markets. There are some of these factors you'll want to identify and include. So 3 of the most important financial statements that fit into fundamental analysis of a stock are income statements, balance sheets, cash flow statements. So how do we predict future price movement? We scan the industry and the economy, thus forecasting the future price movements of a security. The fundamental analyst attempts to predict the future stock price based on certain parameters. It helps in determining a company's fair value and also helps in determining whether it's undervalued or overvalued. So in other words, if it's undervalued, we would consider buying something now to put away till it reaches its current value. If it's undervalued, we would want to sell. Now, this makes a difference because if you're buying stocks, you really can't short them, but there are ways to short stocks. Okay. Or you can trade them in CFDs, and CFDs will allow you to buy and sell. But the problem is with CFDs, even though they don't close every day, they are not developed for a long-term strategy. So there are other ways in which you have to learn how to short a stock if you think it is overvalued. So the fundamental analyst would love to purchase the stock if the current market price is below its intrinsic value, and would sell the stock when the market goes far above its intrinsic value. Hence, fundamental analysis is important in stock picking. Now, management also plays, and we've talked about management just a second ago. Management plays a very important role in making a company successful. So fundamental analysts help in evaluating management and also in making internal business decisions. And as I mentioned, determining the company's ability to beat its competitors. Simply analyzing a company's overall performance will not fulfill the goal. Rather, conducting peer comparison analysis is equally important. You should always question yourself before investing in a company that whether the company is in a strong position to beat its competitors in the future. So remember, the three important statements are income, balance sheet, cash flow. But the real test will be determined if a company's financial strength and its ability to repay its debts. No matter how good or bad the management or the other factors are, by the end of the financial performance matters. Due to the huge amount of complications involved in fundamental analysis, people have a tendency to avoid stock research. Now today you can find a lot of this already done for you. You can find ROI, you can find tax, you can find credit ratings. But a good investor wants to delve below the general surface of the information. You can find stock, well-known analysts who will break this down for you. But again, you as a investor or trader need to be more than just somebody blindly following some analysis or some analyst. Even though there's great ones out there, you need to know what you're doing to make the best decisions. One mistake that's very prevalent in this market is that initially after buying a stock without conducting any research, people start researching once the price corrects. So these people are willing to hold on to their position. So who is this all relevant to? Number one, long-term investors. We understand it. These are people like me who are putting stuff away in our retirement fund. We're putting away for our golden age. Then there's financial advisors. These are people who render financial services and also give stock advice to their clients. 3, then there's value investors. They look for stocks where there's mispricing in the market. Prices and values don't match. And fund managers. These guys work in big fund houses who manage a huge pool of money. Since they have a big role to play and a large amount of capital stake, they have a team of qualified professionals who conduct an in-depth stock research. Fundamental analysis typically refers to a method of analyzing and evaluating equities, though it may apply to some other types of securities. Income statements, balance sheets, cash flow, and other publicly available documents are used to analyze the health and strength of a company. Economic data such as unemployment numbers and interest rates may also be considered. Now you say, why are those considered? Okay. If unemployment is growing, we will eventually see it reflect on the value on say new home sales. Okay. A drop in new home sales will eventually reflect on the big construction companies, the big real estate companies. And will have an effect on their value. If we see a drop in retail sales, that drop in retail sales is going to flow over, not to retail sales in Home Depot or retail sales in Asda, but when we see an overall drop in retail sales because the consumer isn't spending, we're going to see that eventually reflected in stock prices. Okay. So the goal is to find a company that are trading at a discount to their true value, and thus may increase in share value when the markets recognize their quality. Now, of course, there are other markets that we want to look at, but for this class, we're only talking right now about stocks, and for our next class, we'll talk about fundamental analysis of other global markets. So for the national economy, fundamental analysts might focus on economic data to assess the present and future growth of an economy. Fundamentalists do not heed the advice of random walkers and believe that markets are weak formed efficient. By believing that price do not accurately reflect all available information, fundamental analysts look to capitalize on perceived price discrepancies. They look to forecast weather conditions of a market. Successful traders need to be aware of market conditions and plan accordingly. So the key concepts for fundamental analysis, like for Forex traders, is the economy good or bad? Because one will have a negative effect on the currency and another will have a positive effect on the currency. Now that will overflow to stock valuation, but if the economy is doing well, the current country's currency should be going up and the business of that company based on where they are or what type of business should see an increase. So everything flows together. But again, most fundamental, economic events that fall into fundamental analysis have a more direct effect on currencies and commodities and less of a direct effect to stock prices. But keep that in mind, and in our next class on fundamental forex fundamental analysis, we will talk about all the economic events and how they directly focus on the forex market and the commodities market. And then we're going to have a third class on reading the economics calendar and understanding these events and how they create market volatility.